Hey guys, welcome to our second edition of Bitcoin Law Review with your host, Tone Vase. I got four great lawyers on with me for this episode. You've actually seen all of them before at some point on my YouTube channel. We have Drew Hincas, David Silver, and Bill Restus. Let's just go around the room. You guys say hi real quick, and then we're going to jump into the stories.
Hi, everybody. Hi, everybody. Drew Hincas. I'm the general counsel of Athena Blockchain. We are as of a couple days ago now, a broker-dealer able to provide investment banking for tokenized investment products. And I'm also an adjunct professor at both NYU Law School and NYU Business School. Thanks for having me, Tone.
Wait, don't you live in Florida? How does that work?
A lot of airplanes.
Really? So you're in New York? Literally, you fly to New York to teach?
Once a week.
Oh man, I didn't even know that. All right, so we should definitely meet up. David, next.
David Silver, Silver Miller. I'm a plaintiff's lawyer who likes to sue people in this space. I've got about 5 or 6 lawsuits. I started with Cryptsy, and we're suing Coinbase, Kraken, Nano, Tezos, BitConnect. I can't even name them anymore. Used to be a lot more fun.
I was gonna ask you on the latest on BitConnect. Are those two knuckleheads still making YouTube videos, giving you more stuff to get them on?
Well, Craig James and Trayvon James and Craig Grant, they finally realized to shut up. Trayvon, actually, the rumor is Department of Treasury got him.
So what does that mean? Is he like behind bars or something?
Well, he's gone silent, so either he's behind bars or he finally got some good legal counsel.
Gotcha. All right, Bill, go ahead. Tell us your story and who are you suing in this space?
You know what? I'm doing less suing these days, but Bill Restus Law Firm. I've been doing securities class actions for a long time. I'm part of the lead plaintiff group in the Tezos case. And a lot of the other projects I'm working on right now are helping companies do security token offerings. And apparently people think that when you sue these projects, you might have some good opinions on how to keep them out of trouble. So that's what I've been doing lately.
Gotcha. Wait a minute. So you and David are both like dealing with Tezos independently, or is it part of the same class action?
So Bill's got the lead in the class that got consolidated. I congratulate him on that.
Thank you.
Bill accused me of having a double secret agreement with other lawyers. So,
I didn't sign those papers.
Anybody that knows me knows I can't keep my mouth shut on anything, so I could never have a double secret, anything. But yeah, so Bill's got the lead in the Tezos case. I'm actually out of it for the moment. You never know. I may make a reappearance.
Gotcha. Yeah, no, it's amazing. Like I know about 6 or 7 lawyers in the space, and like all of you like clashing with each other. It's like it needs to be like a reality show.
It's the black arts of class action law.
See, man, I've got no clashes. I don't know what anyone's talking about. Really nice to me.
And I got no beef with either of these guys. They're out there, trying to help people who might have been victims to hypothetically some bad behavior.
Well, that's because Drew's an academic, and he invites all the bad guy lawyers to, come and teach his class how to steal money 101.
I don't know anything about that, David.
Okay, we're gonna jump right into like the latest law stories. Just as a heads up, I'm gonna like try not to talk too much and stay on mute, mostly because I completely like sprained or threw my back out this morning, and I'm in an unreasonable amount of pain. Which is another reason I'll be on mute, so there aren't memes around the web of me like screaming like a little girl every time I get a spasm, like every 2 minutes.
You don't want that.
So let's just jump right into the first story. So by this time tomorrow, though, I'll either be at the hospital or in Atlanta for my workshop. It'll be in one of those 2 places. We'll see which way it goes. Planning to still make it to Atlanta though for tomorrow's workshop. All right, first story. Where am I here? They're in no particular order. Now, you know what? Let's save India for later. Let's talk about something more interesting. Well, let's go straight into the Ripple situation. So I thought this was the second lawsuit against Ripple accusing them of being a security. Apparently, it's the third. So everyone keeps trying to sue Ripple for being a security. Now, I gotta, here's my leading question. Why the hell are people suing Ripple for being a security? Isn't this the job of the SEC to do this? Not people. And it seems more like people are mad because they lost money on Ripple. Like, it doesn't feel like, like they care about the ramifications of this case. It's just like one guy that probably bought Ripple at like $2 and lost 80% of his money and is being disgruntled. And now everyone is suing Ripple as a security. But in reality, why isn't the SEC dealing with this? So please comment on this, guys. I guess we'll go in backwards order this time. Let's, Bill, how about we start with you? Give us your thoughts and feel free to say your opinion. Is Ripple a security or not? To me, it's screamingly obvious that it is, but go for it.
Well, let's start from the beginning, what a security is and how it applies to tokens, right? So under the U.S. securities laws, and something called an investment contract can be a security. I think there's been a lot of, I don't want to use the word misinformation, but confluence of terms here. People focusing on the token when it's really the offering that we're dealing with. And we saw this with the SEC come out and say that, for example, Ethereum, the offering could have been a sale of securities, but that the token later wasn't. So we have this case saying that essentially Ripple was a securities offering, and that in order to avoid the statute of limitations on these cases, they said it was a continuous offering that was going on for years. I guess I don't have an opinion about that. What really is interesting to me about these cases is it looks like there was some potential securities fraud here by Ripple Labs in trying to make it sound like the Ripple tokens were being used in ways by financial institutions that they weren't actually being used. So it really looks more like a securities fraud case than a failure to register case. Why no one has brought that, there's very good attorneys that have brought these cases, and why they didn't go down that road is something that's very interesting to me.
I say we let the scholar go next.
I'm actually going to defer to the class action plaintiffs' lawyers on this one. My only comment is going to be that one of Tone's questions was, why are there private lawsuits when the regulator has jurisdiction here? The answer is that private lawsuits get different types of relief for the people who bought the tokens and for the market generally than you get as a private litigant. They have different powers. They can proceed under different legal theories, and you can have a lawsuit brought by the government through its regulator and private lawsuits brought by plaintiffs at the same time. And the plaintiffs might get certain amount of money back, and the government might get certain forms of relief, such as an order that requires the company to buy stock back or to buy these items back, what have you. So there's no reason that if the government wants to enforce, there can't be private suits, and there's no reason that just because there are private suits out there that the government can't also take some sort of action.
I just want everybody to be clear. So when he said he was going to defer, what he meant was he was going to answer the question in its entirety.
Only part of it.
Look, I think the Ripple lawsuits are interesting. People have asked me why I haven't filed one. The answer is pretty simple. Up until recently, and I think Tone hit on this, there weren't a lot of people who lost money in Ripple. As everything was going up, the latest lawsuits, I believe the reason why Tone didn't know, one of them, one's Pro Se, one's Taylor Copen's law firm, and the other one is Robbins Arroyo, who I guess filed it in the last day or two. It's an interesting perspective. I've been doing these lawsuits since 2015. So I believe the pressure of the private litigation has put pressure on the government regulators, but the government regulators don't really care about the private litigation. They have more time. They don't have clients yelling them on a daily basis that all my money's gone. They're looking for different types of recovery. So for instance, in
Well, I'm yelling at the SEC for not doing their job almost on a daily basis. That doesn't count.
Well, you and me both. I mean, this is where you and I were agreeing with each other a couple of weeks ago. No, the SEC doesn't care about you or me, and they don't really care about the investors. They care about convictions. And convictions take a lot of time, a lot of energy, and a lot of crossing your T's and dotting your I's. And I think Drew and I both agree on this. 2020 is going to be a great year for the SEC to come out with convictions.
Now you're stealing my lines, David.
I'm tweaking my own to make them better with your thoughts.
Yeah, so the reason 2020 matters is that there's these things called statute of limitations, and that's how long from when the thing that caused somebody harm a prosecutor or a party has to sue them. So if we've got a 5-year statute and everybody starts selling tokens in 14, 15, 16, that means that the prosecutors or private parties have until 19, 20, or 21 to file lawsuits. That's why 19, 20, and 21 are going to be big years for prosecutors.
And this is why I'm actually stealing Drew's material, because I just use the Theranos comparison. You know, Theranos was a slam dunk. A lot of these ICO cases are going to be slam dunks. The XRP litigation is a little different. Let's be clear. They've hired 2 of the best law firms in the country to defend them. They are not going to roll over and claim their security. I don't pretend to be versed well enough to know whether or not they are security. It seems to me that people invested with the reasonable expectation to derive a profit. The defendants themselves have told people it's going up. That, on a simplistic level, seems to be, the definition of a security. I don't pretend that these are simplistic terms or that these lawsuits aren't complex and complicated. I think it's going to be interesting because whereas a lot of my lawsuits aren't being defended out of the gate and there's been some good law established, the SEC has really done some low-hanging fruit so far. There hasn't been a fight with the SEC yet about terminology. That started to change in 2017, and I think Ripple is going to fight hard to make sure terms are defined the way they want them to be defined in courts and by government regulators. So I think this is an interesting fight, and I hope the lawyers who filed the lawsuits are up to the task to handle it.
Yeah, because on Ripple's defense team is Mary Jo White, former head of the SEC, and Andrew Karesny, who's an enforcement chief, also at the SEC, former enforcement chief at the SEC. Like, I think it's like crazy how they're able to afford these people because they got so rich on the token itself. Again, all of this bothers me. I also saw one of the Ripple senior people as the blockchain advisor for the IMF. Like, they're really like the regulatory capture here could be insane with Ripple.
Well, it's we're not talking about
these former SEC people coming out and defending Ripple, saying that it's not a securities offering when you have all the current members of the SEC saying exactly the opposite.
Well, that's because they're now financially incentivized to go the other way.
That's right. But I think that's a really uphill climb in terms of whether or not that this was a security. One of the interesting things about these cases is that if you're going to come out and say, because these cases are about that this was a security, because it was a security, it had to be registered with the SEC. It wasn't registered. And so like some of my colleagues mentioned, the remedies that are available are unwinding the transaction. But the only way that the only people that have an ability to do that are the investors that invested in the actual ICO. I haven't looked at the complaints. I know the one that was filed by Taylor Copeland, he bought his at the plaintiff in that case bought his at like $3 a token in late 2017, and that wasn't part of the offering. So there's a lot of complexities with these cases. And again, like I said, it seems like there's been misrepresentations by Ripple Labs about the use case for these tokens that might make a better lawsuit. But as you said, David, the people that filed a couple of days ago, Robbins Arroyo, I actually looked at the complaint. They filed with Robbins Geller, and these are 2 of the top securities lawyers in the country. So they probably see something that some of us do not see. So I'm very interested to see how it follows.
Hey. Just to be clear, Ripple's also being represented by Skadden Arps. No slouch in the space.
Yeah, maybe we can get some of the lawyers on that filed these lawsuits. I gotta find the time to reach out. Okay, one last question on this, because I really want to know, and then we'll move on to the next story, because we can definitely talk about this all day. Is anyone gonna bring up like will this matter? For example, like I'm sorry, like the idea that Ripple is a function token that requires the fluctuation of its value to be openly traded on unregulated exchanges is completely just ridiculous, right? Like, even if they can convince me that there needs to be an internal token, the idea that this token's value needs to be found by the free unregulated market is ridiculous. And is that something that could play a role in this case at any point? Like, I understand the ICO part is obviously security, and that's where the real lawsuit is. But the part, like the conceptual part then after, of the application token itself needing to be traded like Apple stock to define its value, to then be used internally for movement of data. I mean, can that concept be challenged? And like, what law can that fall under? Because that's just like ridiculous.
That's a good question. What law can it fall under if it's not right? If the securities laws are focused mostly on the offering, at least with respect to crypto assets, and we have some indication that maybe they're not securities once they're out there live in the marketplace, then that's a very interesting question of what box it goes into.
Any thoughts, David, Drew?
On the table yet?
Well, I think Drew and I would have two different takes on this. Drew gets to look at, the detail on a classroom academic view, where
Bill and I love when you talk for me. It's great.
Bill and I are going to throw the kitchen sink in a complaint. I don't need to. I'm fighting right now tobacco litigation before there was a tobacco verdict. I'm going to throw everything I can in a complaint and see where it falls. So right now, the problem is, with all of this discussion about private litigation, government litigation, regulators, the crypto companies, every time they get into the court, they claim there's something else. They have a very amorphous, body when you finally get to throw a punch. So my attitude is this: look, I'm scared of the Ripple litigation, because if there's not a financial incentive for the lawyers who are handling the case, there could be bad law created by a bunch of lawyers who are taking a shot. I'm happy that Robbins Arroyo stepped up. I don't know if Bill said that they're partnering with Robbins Geller on this or not.
Both. It's funny. There's two Robbins brothers, Brian Robbins and Darren Robbins, and they run both of these firms. So they tend to partner on interesting cases like that.
Gotcha. But I mean, I just pulled up the complaint. The second one, it's Brian Robbins on the complaint. I didn't realize, so the Robbins brothers are brothers in real life.
They're real brothers, yes. I don't know if they have the jewelry store or not. Maybe that's a West Coast thing, but.
So, I mean, I used to have a firm with my own brother, so I get the difference on why you don't do the law firm together anymore, so you guys can have a Father's Day and Thanksgiving together. But my point being, I'm glad that some bigger people are stepping into the Ripple fight, because the Ripple fight is going to be an expensive, hard-fought fight. And I don't want people with claims, that are $1,000, $2,000 deciding the law of the land and having to first go unwind that. I think it's very problematic, and I think that people want the fight because, look, I'm kind of with Tone on this. This is pretty clear-cut a security. And it's unfair because they're getting to finance this litigation with deep pockets for having already committed the act. They committed the act, and now they're begging for forgiveness. So I think as we move forward, I personally I'm still throwing the kitchen sink. The academics will tell you which causes of action have a better chance of standing up in court.
All right, so that was good. We'll probably bring back the whole Ripple thing in the near future. Let's move on to the next one. Another interesting development happened this week. The IRS launches an international coalition to investigate cryptocurrency tax crimes. Now, I didn't see this coming. I mean, I kind of did. The first article I ever wrote was about tax, but I just didn't think it would be coming this soon. but they are really going after the whole crypto space. I don't really, I mean, I'll have my own comments on this. This is the whole reason why cash is being eliminated is primarily to hunt taxes on people. And cryptocurrencies is a big problem for that. So the governments are getting serious. Now, here's the thing. So comment in general on this initiative. And it's weird that only the Netherlands out of the EU is involved. I would think that this would be, all of EU or some kind of it's just, I find it weird how it's just one country out of Europe. I'm not surprised on the rest. They're big, tax enforcers. But my question is, are they seriously looking at crime, or is it just like some guy cheating on his taxes because he bought some Bitcoin early is treated the same as, some kind of a cartel that's actually doing the money laundering? Now, to me, money laundering is an immoral law enforcement law, but that's just my opinion. Let's go with Drew. Why don't you're the law professor. I don't know how much you know about tax law, but give this a shot. Like, what are your thoughts on this in general? And where do you think this is going to go?
Thanks, Tone. This is one of my favorite topics in crypto because it's pretty poorly understood. You made a statement before that I thought was really interesting. Just because something is legal doesn't mean it's right or good. And just because something is illegal doesn't mean it's wrong and bad. Laws reflect the morals of society at a certain point, and morals and values change over time, which is why laws also change. Things that we thought were wrong, were illegal 200 years ago, are legal now, and vice versa. But anyway, your comment that this Joint Chiefs of Global Tax Enforcement was not foreseeable is kind of wrong. We have this organization called the Organization for Economic Cooperation and Development, which about a year-ish ago asked for cooperation among taxing authorities to try to find tax fraud on a broad level. One of your questions was, what kind of tax fraud are we talking about here? And one of the examples that this organization used in announcing its presence was a cartel called, or referred to as Cobalt in Europe. Cobalt hacked some European banks and stole a whole bunch of euros. They then converted those euros into gift cards anonymously, and then had the gift cards swapped for cryptocurrencies throughout Europe, and then use those cryptocurrencies to move that value around very quickly. And all this was done in a way that was designed to circumvent tax detection and to circumvent the need to disclose your identity in these transactions. So this is a group of folks that, as a result of the OECD getting together, or the OECD getting together and saying, we need to look at tax evasion, have gotten together to try to figure out a way to share notes and to cooperate in investigations of these kind of cross-border tax crimes. Now, the Cobalt example is a pretty obvious one. It's clearly money laundering and tax evading under almost every country's laws. As far as which countries joined, I think Australia, Canada, the US, and the UK are sort of obvious complementary partners. The Netherlands joining in may have something to do with their traditional role as a place of international commerce. Antwerp is known for diamonds. The Netherlands has always been a shipping capital. So it makes a lot of sense on a number of levels that they would be involved in international transactions. I would not be surprised to see this group grow in numbers. Right now it's the J5, as you can see on what you have pulled up on your page. I wouldn't be surprised to see more countries joining in. And this to me is something we should have entirely foreseen. The securities lawyers and the securities regulators are blazing the trail. But as a very smart lawyer that I know, named Katia Fisher, mentioned, right behind the SEC is going to be the IRS going after everybody for taxes. And I wouldn't be surprised if maybe 6 months to a year from now, they start to look very closely at the funding of ICOs, maybe not domestic ICOs necessarily, but the funding of ICOs to look to see if there were some interesting money flows happening there.
Well, and I think a corollary to this, as I said, I'm dealing with some clients who are attempting to do STOs and raise money on the blockchain, access capital markets on the blockchain. And one of the big issues is the anonymity of contribution wallets, because I think that's probably one of the biggest concerns of the regulators, whether it's the securities regulators or the tax authorities or the anti-terrorist organizations in various governments, is that everyone wants to know where the flow of funds is coming from and going to. And I think we're going to get an increasing amount of scrutiny on attempts to avoid that.
Right, and from an ICOing perspective, we all know in the United States since 6/25/17 that if you're issuing a token, you've got a 99.8 or 9 something % chance that you're going to be required to follow the securities laws and issue in accordance with or exempted from the securities laws, which is why everybody's using Regulation D or Regulation S or A+ or CF. But a lot of folks are issuing pursuant to the securities laws or exemption, but they're not necessarily explaining what that thing is that they're selling. It's not expressly stated to be an equity or a debt instrument or some kind of structured product, which then can have some really interesting and complicated tax impacts. The way that folks have tried to get around this problem is by having sort of a split approach. The fundraising entity would be in some sort of tax haven, whether it's Switzerland through their foundation model that would have some kind of tax deferment, or perhaps Singapore or some other friendlier jurisdictions. It wouldn't surprise me if those sorts of structures are being looked at by this group. But for domestic issuers, you've got some really interesting tax issues, because this isn't legal advice, just a sort of an observation here. If you are an issuer of a security, I don't believe that's a taxable event. But if you're selling a good, that is probably something subject to a variety of different taxes.
So I'll just take a step back and say I thought Tone was being sarcastic when he said he didn't see this coming. I, like Tone, I don't understand the taxes. I think right now the statistic is like 7% of Americans hold some form of crypto. I believe that's incredibly an inflated number, but less than 0.5% filed a tax-related event on their tax returns for it. That I believe. Just like they got Capone, I think a lot of the government is they're going to go on Twitter almost and find all these people talking about their crypto and go after them. I think this was easy to foresee. I think this is one of the easier ways to go after people in this space. And I thought the most interesting thing that Drew said, which I completely agree with, I personally believe a large amount of the crypto used in ICO investment is simply laundering other crypto gains and diversifying that person's position that will make it that much harder to trace. That if someone, mined a Bitcoin in 2011 and they had a lot of Bitcoins, an easy way to move those Bitcoins into a diversified portfolio without exposing themselves to KYC or AML in 2016 was to put all their money into these different ICOs that didn't care who you were. So I do believe the IRS is going to be a big player in this for years to come. And, I think that eventually the rules are going to change as to what is property, income, and all that. But I do believe the IRS is here for a while.
Yeah, but if the person did that, that person would have been better off just holding it in Bitcoin, right? Because sure, they could have bought all of these non-KYC ICOs, but now most exchanges are becoming KYC exchanges. So for him to get out at this point today becomes very, very difficult anonymously. Had he held all of that Bitcoin still from 2011, from 2012, then he doesn't have to declare it until the day he wants to when he sells it. He can just hold on to it and not report anything, correct?
Well, I'll give you my example. If he got the Bitcoin at $1 and he put 10 Bitcoin into Tezos in 2017. Bill, what are Tezos trading at? 10x right now? 8x?
Something.
So he'd have an 8x return on his Tezzy, but he's going to have a 6,000% return ROI on the Bitcoin. If he just files for the Tezzy increase, he's now saved himself tremendously on his tax return. He's lying either way, but this is just a way that
but if he's going to report the return of Tezos, they can say, well, where did you get the money to invest in Tezos? And then he might have to prove that he went out and bought those Bitcoins. And if he can't, that's an issue, no?
Well,
Well,
I agree.
the
I'm
off ramps that are going to be, are really going to be the problem for keeping everything anonymous. You can keep your funds in crypto, but whenever you want to turn it into fiat, the records will exist.
Right, unless you're finding somebody who's going to meet you at Starbucks and hand over a wad of cash for a transfer. If you want to do this in a more streamlined way, nowadays you're going to deal with an AML KYC registered entity that's going to, guard that off ramp. There are varying platforms with varying levels of adherence to that AML KYC law, but generally speaking, in the U.S., if you want to off ramp out of your crypto, you're going to deal with a regulated entity.
I agree with that.
We got to stop agreeing, David. This is less fun when we keep agreeing.
I just said I don't agree with you.
Oh, you don't agree with me. That's better.
I do not agree. I do not agree with that.
Okay.
I think that there are some exchanges that are more legitimate than others today. I think there are a lot of exchanges that are not exactly caring about KYC or AML, and I believe there's a lot of manipulation, whitewashing, regulatory issues with a lot of the exchanges out there. I think someone posted today that volume is up. I think volume is one of the easiest things that can be manipulated on exchange today.
Wait, did somebody release new tethers?
What?
Are there new tethers?
Look, I mean, I think that the Bloomberg article about Tether last week raised a lot of eyebrows, and the defense to it was, trust us, we don't lie. I mean, I think that's ridiculous. But then again, I have a lawsuit against Kraken, so, I'm sure I'm not the only person that doesn't believe anything they say.
All right, guys, I got one more question on this tax stuff, and then we'll move on as well. So how about this hypothetical, right? So again, like I know you guys aren't tax attorneys, but do you agree that if you bought your Bitcoin a long time ago with cash or you mined it, you don't really have to report it until you sell it? You can just hold on to it in your cold storage. You don't have to notify the IRS every year. That would be a bad idea, because if I would have reported it as of like January 1st and paid taxes, now I lost a shit ton of money, right? So you're not actually reporting it until you sell it, kind of like your house, right? You don't really, if you buy your house, you don't really report the gain on that until you sell it. That's my understanding of it.
Yeah, Tone. So I teach this in my class, so I can talk to you a little bit about the IRS Guidance 2014-21 that has 16 questions and answers as to tax. When you obtain an asset, whether you get it as payment for doing some work, whether you obtain it as a miner, or whether you give something else of value, that's a taxable transaction, but you don't pay taxes on the value of the actual crypto when you obtain it. You pay taxes based upon what you gave in order to get it, because it's property. So if I, for instance, worked for a law firm and they paid me in Bitcoin, then I would pay taxes based upon my income. When I then trade that Bitcoin for something else, under the prevailing guidance, I have to value that Bitcoin, and that becomes what I sold it for. And then there's a difference between the cost of getting it, which is referred to as the tax basis, and the value at the time that I traded it for something else. And if it's a positive number, that's a gain, taxable at either the long or the short-term rate, depending on how long I had it. Or if it's a negative number, it's a loss. And it's, again, you get a benefit at the percentage based upon how long you held it. You have a higher tax benefit on a loss, or a higher tax burden on a gain if you had it for a shorter period of time, and a lower for longer. So if you mined and you obtained a Bitcoin, let's say you obtained 1 Bitcoin, you would have to pay taxes on the Bitcoin that you received at that time. And if you trade it for something else going forward, you have a gain or a loss that's a capital gain.
And just to add one thing to that, there's no such thing as a like-kind exchange in crypto.
Well, there certainly isn't one going forward, because the new tax bill got rid of it. I personally am a big believer that it was never there, but we've never received guidance from it, from the IRS as to that issue. So that'll be something that we get to argue about until the IRS says something.
Yeah, I just know a lot of people right now believe that they can, because, and it's a fair argument. It's not actually the worst argument in crypto I've ever heard of, but a lot of people believe it's property for property. You can do a like-kind exchange. I don't personally believe the government's going to view it that way, but it's something that a lot of people are at least bringing up on the tax issues.
Now,
but again, not a tax lawyer.
The payment part seems crazy to me, right? Because again, I work for a financial institution, and we would occasionally get stock as our bonus. Now, we don't pay tax on that. You only pay tax on that bonus when you cash it out, because that stock can go to zero. And then if you pay tax on your bonus and then the company goes bust and it goes to zero, you just pay tax, but you got nothing on it. It's just like you literally lost a shit ton of money twice.
Yeah.
So we've got guidance that was based on the understanding of how these things work in late 2013, early 2014. I don't need to tell anybody on this panel or who's watching that things in crypto are a little bit different than they were in 2014. Tax guidance doesn't talk about things like airdrops or chain splits or any of the variety of new behaviors and new products and new distribution mechanisms we've seen. The tax guidance could really use some work. If anybody wants to see what the CPAs of America think should happen, Google AI CPA Bitcoin, and you'll see two letters that they sent to the IRS proposing how things should work. I've got a paper coming out where I'm proposing a new way of valuing crypto for the purpose of doing taxes that I think makes more sense and is less burdensome on crypto users. But suffice to say, tax is an area where we're going to see a lot of evolution. We're going to see hopefully some clarification, and you can bet you're going to see a lot of enforcement.
Yeah, that would be nice. You know, before forming a 5-country coalition, how about making it very, very clear how people are supposed to pay their taxes on crypto?
Well, they have. The only thing, in my view, that is unclear is how you're supposed to value the crypto. If you look at question and answer number 5 of that guidance, it says you're supposed to use a reasonable method, which is, in my view, unconstitutionally vague. But that's basically what my law review paper is about.
Now, here's where Drew and I disagree again, because I like when we disagree. It's really nice, but I've received crypto in 3 different methods of taxation. I don't think that's fair. It's, you know, there's got to be a universal plan. But going back to what you said about the stock, I'm not a tax lawyer, but it was always my understanding if you got a bonus from your company that was fully vested shares, at the time you received that stock bonus, that was a taxable, that was part of your compensation and your taxable amount. Now, restricted shares are completely different. But Bitcoin, the moment you receive it, you've received an unrestricted asset.
Yeah, I think Tone's talking about options or warrants.
Well, that's what I'm talking about. There's a difference between fully vested, options, warrants, and
right. But even okay, so yeah, even when I get stuff that needs 2 years to be vested, the year that it gets vested, I'm still not paying taxes on that. Only when I cash it out.
But that just forms your basis, right? The value when you received it.
I don't believe so. It's just whatever I cash out is just extra income.
Taxes.
Anyway,
a better question for accountants.
It's pretty clear that the tax system in the U.S. is unreasonably complicated, and it's probably worse in some other countries as well. All right, so let's move on. We'll definitely come back to the whole tax issue, but this is bad. Like taxes in crypto, I still think that like it's weird. Like my accountant like barely understands Bitcoin. Like what do you do?
So one of the issues with the guidance is that it does not come up with a standard means of evaluation, which means that 2 people can look at the same transaction made in the same pair of cryptos and come to, depending on how they choose to measure and their methodology, different conclusions as to the amount of a gain or a loss. This creates a very frustrating situation for the taxpayer because they're not really sure if they're quote unquote doing it right. It also creates a very frustrating situation, I'm guessing, for the IRS. If somebody decides to audit one of these, they may or may not be able to tell the methodology that was used. From the IRS's perspective, they would get better certainty if there was a standard way of approaching the valuation of these asset transfers and the way that people choose to declare their gains and losses. I've heard of people in crypto that make a line item, crypto losses, 50 grand. I've heard of people that take the CSVs that they're able to dump out of exchanges and basically marry that with their own notes about what trades they made at what time, and essentially use the values that they paid as spot and declare based on that. And there's a lot of work to do to make it make sense. Let's hope that in the coming years they come up with something that makes it a little bit easier.
Yep, because it gets ridiculous, right? It's my final comment. Like, if you're earning Bitcoin in 2016, in 2018, throughout the whole year, it's possible you owe more taxes. And if you kept it all in Bitcoin, by the way, you're earning Bitcoin, you're living dirt cheap, eating Chinese food, earning Bitcoin, thinking that it's going to go to the moon, but it keeps going down. At the end of 2018, you can have a tax bill that is greater than every single Bitcoin you own and all the money you have. Like your tax bill for 2018 could be greater than your net worth, including your Bitcoins. What happens then?
Then you get a payment plan.
Well, it's the same thing that happened to the people who had the stock options and the stocks.
Right, the .com guys, right.
Yep. Yeah, I mean, it's the same thing. But again, call a good accountant. I'm not one of them.
Yeah, find yourself a qualified CPA or tax preparer that's done this stuff before. Get a second opinion if you're unsure.
And when it goes wrong, call me up and I'll sue him for malpractice.
Perfect. All right, sounds good. All right, let's move on before my life gets more depressing. All right, Binance. So they screwed up again. I hate Binance. It's hard to say who I hate more, Binance or Coinbase. But because Binance ICO'd and printed their own money, I've always been very, very critical of Binance. And every time I see the acronym safu, I keep thinking that A is really a T, and I wouldn't be surprised if that CEO said it that way. But so they screwed up again. And I think it was Syscoin or some other scam coin traded for 96 Bitcoin. So somebody paid 96 Bitcoin for a scam coin. I think that was part of this whole disaster. And they're calling it a hack. I call it more blatant incompetence, being blamed on a hack. And they're planning to create some kind of an insurance fund, which is something they should have done to begin with. In fact, I said they should have done this like 2-3 weeks ago when they had $1 billion and didn't know what to do with it, and we're going to invest it in ICO scams. I said they better put that down into a fund because they're going to get hacked. And this looks like I said, this sounds more like incompetence. Did you guys look into the story at all? Unfortunately, I didn't really look into it because I don't really care all that much. I think it's a scam of an exchange. And I think this is just, I mean, they could have stole people's money for all I know. I don't trust them. I would never trade on there, but people love it. Thoughts? I don't know who wants to go first.
Let me ask you a question, Tone. You're a trader. You're obviously using a variety of platforms. Would you pay higher transaction fees for an insured platform?
Absolutely.
Okay.
I mean, I trade on one of the cheapest transaction fee platforms in the world, but they're interactive brokers. They're a global, trusted, responsible operation.
Right, the reason you're working through a group of OTC providers as opposed to through like a mechanized exchange, right?
Well, no, I don't. This is why I don't trade Bitcoin, because I would never risk my Bitcoin to some incompetent Chinese company. I trade traditional markets because I know those exchanges are insured. I trade on the bigger exchanges. Even still, I remember the MF Global incident, which was, run by the former, was he the former?
New Jersey governor, senator.
Yeah, and former CEO of Goldman Sachs, and they stole everybody's money. So I don't touch boutique firms, even in the traditional space. I go to the big national guys. Like I would trade with maybe Thinkorswim with Ameritrade. I'm trading with interactive brokers. TradeStation is pretty good. So I go to the big boys, because if they collapse, like everyone's in trouble. Like it's another 08 and worse. So I would never trade on these things. But there's not much they can do about this until Bitcoin starts being traded by the traditional exchanges. And I guess you could with the futures, but not the underlying Bitcoin.
I mean, look, the reality is that everybody understands that leaving your coins on an exchange is delegating your hygiene and your cybersecurity to somebody else who may or may not have the same incentives that you do. That's just the reality of how these exchanges work.
Oh, wait, no. 99.9% of the people who trade do not understand what you did.
Okay, so I'll repeat it since David thinks it's important. When you leave tokens on somebody else's exchange, you are delegating to them the safety and security of your tokens. That being said, there are lots of people that have 50 different tokens and don't want to download 50 different wallets and manage 50 different private keys. So then you've got trade-offs. The reality is, Tone, whatever you think of Binance compared to any other exchange, they've been amazingly successful, and I'm not apologizing or defending them. What I'm saying is all these exchanges open up APIs to allow programmatic traders to use their bots and to do what they're going to do. It's a key part of the infrastructure that makes this environment work. And so if an API got hacked and somebody manipulated a coin, right now, so far, the market has decided that that's an acceptable thing that can happen on these exchanges. In my view, there should be an exchange that gets out in front of this and says, we will insure you and you're going to pay through the nose for trades. And we're going to provide for you something akin to what the FDIC did in response to the banking panics of the 30s.
Well, right. This is what I said on my YouTube channel weeks ago. Binance should do with their $1 billion they were going to turn into a VC fund.
Okay, but they left Japan to avoid regulatory scrutiny. So let's not say they're going to go the legitimate route while in Malta. My problem is, I agree with what Drew's saying in principle. We all want an exchange that's insured, regulated, that you feel safe on. The problem is right now, most people believe their crypto is safe on the exchanges that they have them on. And all history has taught us is every major exchange so far has gone down. So most people still don't kind of grasp that Coinbase, Kraken, Poloniex, Gemini, the major U.S. exchanges. I don't know if I left anyone off accidentally. People are starting to get a feeling of security trading on those platforms. The moment you take those platforms overseas, I think is a very dangerous proposition. And going to Binance, for instance, HitBTC is one of my favorite companies to talk about. A lot of people are having problems getting their money off HitBTC right now. There's nobody to go after. There's nobody to sue. So, there's got to be, as we transition, and I think 2019-20, as the regulators get their hands around what they're going to do, one of the major platforms will open up and we'll start seeing US-based, insured, regulated exchanges where you can exchange your crypto, and then, Tone, you can start trading your crypto and get tracked for taxes.
Right, and so this whole issue kind of harkens back to the Dow report from 6/25/17, when the SEC said that Dow tokens were the offering of a security or an investment contract.
Yeah, they specifically said it was a VC fund. Which,
no, they didn't say that, Tony.
Yeah, they did. I'm going to pull it up.
Show me where they said.
I will. I tweeted it out. I will. You keep going. I'm going to look for the screenshot.
Sure. So what they said, David, you're turning red, buddy. What they said is that not only was the offering of an investment product that should have been offered pursuant to or exempted from the securities laws, but they actually kind of stepped out of their own subject matter to put in a page about how all the exchanges were non-compliant, and that if you're trading things that need to be offered pursuant to the securities laws, that they have to occur on regulated exchanges. I know one of the things that Bill wanted to talk about was a certain aspect of how stock exchanges and equities exchanges specifically are regulated, and sort of some of the incompatibilities you're going to see with the existing crypto infrastructure. But I think it's really important to note that we are used to having a bunch of different platforms that work in a certain way, and there's a lot of predicate assumptions that go into the way that consumers deal with the platform that don't exist in real life in crypto. And so, Tone, I think your point about people assuming things, and Dave, your point about people assuming things, are well taken.
Well, yeah, I say this all the time. Most of my clients who have lost money, they all believe that they were trading something akin to a share of Apple stock. They were all anarchists and libertarians until they lost their money, and now they want their money back. I mean, now that I'm not technically in the Tezos case, I get to make fun of Arthur and Kathleen Brightman a lot more. Bill can't say what I'm about to say, but let me tell you, Arthur Brightman, who went out and said, "I'm sorry, we're doing KYC AML now. It's not up to me." Well, it kind of is up to him because he wants his $1 billion. I mean, those guys need to learn that, you want to play a big boy game or big woman game. Kathleen's just as bad as Arthur. Those people have a responsibility to follow the laws of the land. And I hope guys like Bill take them for every dollar they can.
Tone, what are we looking at here?
So we're looking at a little footnote in the report by the SEC that
What
says...
report? What report is that?
That one.
Never seen that before. Can you post a link? I don't.
I'd have to look for it. We can Google for that. It was a report that came out about Ethereum and the DAO. I believe. When did I send this tweet out? What's the date on the image? Hold on. Let me see here.
I mean, that looks like a report from the Federal Reserve, and the Federal Reserve is a little bit different than the SEC.
Could have been, but
I'm just looking at the title.
Yeah, we'll have to Google the title. But like it clearly says right here, running on Ethereum blockchain that acted as a venture capital fund. This was a report about the DAO last year in 2017.
Okay, so it was the Fed, not the SEC, that said that. Got it.
Okay.
Well, to go back to what you were talking about exchanges, there's so many fascinating aspects about how traders may or may not be getting exactly what they think they're getting when they trade on an exchange. So first you have to ask yourself, well, what do the computer programs that match orders, what are they doing? So there's generally accepted rules when you're trading securities that you have to have something called price time priority, and that the order books operate in a certain way, and that you need to get the best price. So, for example, Tone, and I'm not picking on the exchange that you referenced, you said they had the lowest fees anywhere. Well, one of the things that we don't have disclosure on right now is that because there are programmatic traders, we used to call them HFT, high frequency traders, that are stepping in front of your order and taking a piece of the gain. Do you have undisclosed market makers? There's so many of these.
Yeah, there's a couple of reasons. Like back in the day, back like 10, 15 years ago, the reason for them having like the lowest fees in the space was because they provided the retail investor the least amount of, help. They were not very user friendly. They didn't have like amazing customer support. They didn't have, all of these research tools. You're more like, hey, if you know what you're doing, go trade there. If you're not going to use all of these extras, don't. This is why you get cheap fees.
Well, and it may be, and it may be for that specific exchange, but there may be other exchanges that have to put it plainly, they're making their money on the back end, and it's by skimming a small penny or whatever it is, a Satoshi off of any particular trade that's not being disclosed. And as Drew was mentioning, the SEC came out and said, if you're going to be trading securities, this needs to be done in compliance with the securities laws. And part of that is making sure that there's very clearly defined and very easily disclosed procedures for doing that. I remember a few years ago, and I was trying to think of what dark pool this was. But there was some enforcement actions, and it might have been Credit Suisse, for anybody who wants to take a look, where the dark pools were giving out special order types to certain traders that paid premium fees to the exchange. And so they were able to jump ahead in the line and get preference in their trades. I suspect that we're going to find a lot of the exchanges are implementing the same types of, frankly, underhanded conduct, and bringing all of this to light in the context of regulated exchanges, I think is a very big deal. Now, I know David was saying, look, how are you going to deal with this when it's a decentralized exchange? And I think that's one of the most interesting topics that's going to be coming down the pipeline.
Oh, I couldn't agree with Bill more on this. I mean, I've been saying this for a year. 2019 and 20 is going to be the year of exchanges. In order for Bitcoin price to have a mobile upward trajectory, more people have to get into the space. For more people to get into the space, they have to be able to convert dollars and fiat into cryptocurrency. The average person, for the exponential growth, needs to be doing this on a regulated exchange. They need to feel safe and secure. The big boys have to come in. Like I saw something on CNBC. Fidelity is really the first one that wants to jump in. They haven't done it yet. But it's going to be someone doing that to come in and say, we're doing this under regulation and we're going to do this with public disclosures. But there's a lot of trouble that people are going to get into first.
Hey, David. So sorry,
yeah.
I got to interrupt you for a second. Drew has to go in like 2 minutes. I wanted to just get his real quick thoughts. Nothing has come out yet about the national market system, which is a law saying that, hey, if you're dealing with a security, you're supposed to provide the user with the best bid offer spread and let them buy it the cheapest. Now, nothing has been written about it in the crypto space, but the moment these things start getting classified as securities, none of these exchanges are coordinated like that, because in reality, they should be brokers, not exchanges. So Drew, thoughts on this, or we can bring it up on the next episode that we do this?
I'll share a couple thoughts. I know Bill wants to talk about this as well, but part of what the SEC said in the Dow report was that if these tokens are securities, they need to be traded on platforms that comply with their regulations as to how securities are traded, or they need to be handled on a exempted platform referred to as an alternative trading service. The ATSs are, a platform gets qualified as an ATS by complying with some laws and filing a piece of paper with the SEC. That doesn't mean that they get to start trading assets. They have to comply with a number of regulations which require them to create a document that gets approved by FINRA and the SEC that talks about how that exchange is actually going to work. That's referred to generally as a handbook. If you're a platform and you are trying to do trading, you need to come up with a handbook that gets approved. And getting that handbook approved is a serious piece of legal work. He or she who gets that first handbook approved will have the first mover advantage and allow for trading of these assets in a way that's compliant. Otherwise, if you're trading a security token or a tokenized version of an investment product, you technically should be trading through a broker dealer, which creates all kinds of really interesting implications for tokens that are supposed to be used in the context of a system where you create the token and then you cash or trade the token in for another type of service or product. What this Reg NMS talks about, specifically in Rule 611, is the idea that if you put in a trade, you should get the best price. This would require a level of coordination among market makers that don't exist in the spot markets we use right now. And there's a lot of serious work that needs to be done to get crypto trading in compliance with that reg. And I know Bill wants to talk about this more and in a lot more depth. So Dave, Bill, it's been a pleasure. Tone, thanks for having me, and I'll see everybody next time.
Thanks, Drew. We'll try and do it again next week.
All right, so long, guys.
Yeah, I can't say that I want to talk about it in a lot more depth at this point, but you know, because this is necessarily a podcast probably for non-lawyers, and there's participants in the crypto markets. You know, the buzzword is that now that we're starting to classify altcoins essentially as securities, we have to ask where they can be traded, and if they're securities, they need to be traded on regulated exchanges. And if there's no regulated exchanges, what's happening to the exchanges that are trading them? Is this trading legal? Is it illegal? But the other important point is, you know, as David was saying earlier, is that there's software that goes into matching up a buy and a sell. And what's in that software is incredibly important for the price that traders are going to get for their trades. And to the extent that that they're a black box, that market participants have no idea what's in them, or if there's other market participants who have made special deals with the exchanges to get trading information first, these are really hot button topics for the safety of investors' assets.
All right, Dave, you want to comment on this, or we'll move on to our last topic real quick, which is India. Not sure how proficient you guys are in Indian law.
No, I think that this is the wave of the future in order for cryptos to mainstream. It's not there yet. In all of the lawsuits with Coinbase, Kraken, BitConnect hasn't responded, so it's not really fair to lump them in. They claim that they don't have to abide by these rules. The lawsuits are about, Jesse Powell posted a blog where he says crypto traders don't care about market manipulation. I mean, that's absurd. So
that's all they care about. They're screaming market manipulation when some guy buys 1,000 Bitcoin. Like I'm screaming at them that what they claim is market manipulation isn't even market manipulation. But every one of them blames market manipulation every time they lose a trade.
I mean,
you're dealing with children when it comes to trading crypto.
So it's pretty incredible to me that, I think, look, T0 is going to come out there. They claim they're going to be compliant. It's I think Bruce was on a couple of times I've been on. Bruce is part of that whole thing. Look, someone's going to do it. It's the wave of the future. And the wave of the future is compliant exchanges. We're not there yet, but people think we are.
Well, and a big part of this is having a national or an international market for any particular security or any particular token. As we know right now, you can go to one exchange and the price can be 10%, 20%, 30% different from other exchanges depending on liquidity. And so if you're really talking about compliance, these exchanges have to have fiber optic cables that connect themselves, that connect to each other. In the stock markets and the equity markets, we have something called the consolidated data feed, where all of the dark pools, all of the exchanges, they send their order information out. It becomes this incredibly complicated soup of data, and we have nothing like that for the infrastructure of the crypto community.
Right, and I've been talking about this as far back as like 2015 when I was moderating panels with exchange CEOs. And I kept saying, like, do you guys realize that in the traditional finance space, exchanges and brokers are separated? But in the crypto space, they're one and the same. Mm-hmm. Like I trade with Interactive Brokers. They're not an exchange; they're a broker. Options Express, TD Ameritrade, Charles Schwab, they're all brokers. They feed into an exchange. An exchange has all of the liquidity. That's why these brokers have to feed into that. We don't have anything like that. Now, the problem with doing that in crypto is you're creating honeypots of all of these coins. So you really are going to need maybe 3 or 4 actual exchanges. And then you can have infinite number of brokers. So for something like Binance, they need to be a broker, not an exchange. They shouldn't be responsible for storing the crypto. Maybe Gemini, they seem to have a good track record of not being hacked. They should be storing the crypto. Or maybe Barry Silbert, he has a pretty good track record of not getting hacked with GBTC. Like you gotta, certain institutions should be able to store the crypto, and you, like the Binance, the Poloniex, the Bitfinex, they have the worst track record of storing the crypto. They should be just brokers that provide you trading tools so you can buy and sell.
Yeah, I think that's right. If we go too much farther into this, it's down into the weeds where people are going to start falling asleep if we continue down this road. But there's a lot of market opportunities for people that want to come in. I think one of the most interesting projects I saw a few weeks ago was Peter Thiel got involved with I think it's Tamagotchi Systems, and they are attempting to actually do an exchange that does tie into some of the other major market makers and bring all of the features of the securities laws into play, and it'll be an interesting thing once we get there.
I was just surprised by your lack of love for Bitfinex. I didn't realize they were the bigger ones you're complaining about nowadays.
Hey, so last story, I think we went over our hour, but real quick, I don't know if you guys care or not. And I've said this before, like, you know how you mentioned it earlier, how Binance has moved to Malta. And I said, hey, if you think you have a country with very loose and free laws and every single scammer moves there, that country will get draconian real quick. So India, Bitcoin got really hot in India. So what they do, they just banned it all. And it's pretty bad. Like it sounds like they want to criminalize it. They did absolutely no like investigations on this. They just said, hey, we don't like this crypto stuff, banned. Like, I know it's just India, but do you guys think like something like this possible in a first world country? Canada, US, Australia?
I don't see anything like this happening in the US. I think where you're going to see the problems again is the on-ramps and the off-ramps. Okay, so you can theoretically keep something like cryptocurrencies entirely legal and without any kind of legal repercussions, but you can choke off the on-ramp and the off-ramp, and you can make the conversion of it legal or illegal. And that's where I think governments, sophisticated governments, are going to try to say, no, we're not messing with Bitcoin, we're not messing with cryptocurrencies, but at the same time, they're actually doing something about it. And that's really where I would look for enforcement, at least in the United States, is through actors like the IRS, trying to deal with these choke points, as we said earlier in the discussion.
All right, David, quick thoughts on India, and then I'll let you guys go.
I think we're going to see more and more countries do more and more weird things. Who knows who's going to do what? I got no idea.
All right, guys. Hey, thanks again. Let me cut the screen share. I forget that I'm on screen share. I'm going to pull up something that I shouldn't pull up one of these days. So, hey, thanks, guys, for joining. Try to get it down to an hour so we can all end together with Drew. We'll do it again next week. I like this show. Della couldn't join us today. I got a couple other lawyers as well. We'll see how many we can get per show. I think this stuff is really important. And we'll see. Maybe get an accountant in here as well. So we'll see how that goes. It'll be like a regulatory show. But hey, thanks for joining, guys. Final thoughts. Bill, we'll go with you and then tell our people where they can find you and stuff.
Feel better, Tone. Make your back is critical to quality of life. William at restislaw.com if you want to get a hold of me. And I'm out there and I'm doing some cool things like all of us in this space.
Cool. Thanks, Bill.
Tone, I got the plane fueled. I will go to Atlanta for you tomorrow. And last week's show was a much better looking crew than this week's.
Yeah, I'll keep trying. I keep trying. All right, David from David Miller firm. We gotta get Miller on here one of these days.
He exists in reality.
All right,
thanks, everybody.
Have a good one, guys.
Bye. I am gonna do a little bit of TA to close this out. Feel free to stick around or get going. I know you guys have jobs.
Yeah, there's some things that are popping up in my inbox I have to address.
Yeah, so. Go for it. Yeah, don't feel obligated to stay. And yeah, for those of you that joined us late, I have 900 viewers now. There was like 200 in the beginning. I really screw up my back this morning. Like I'm actually surprised it held up this well because I was basically screaming and cursing the prior 3 hours before the show, and I still have no meds, so I got to figure that situation out. But let me just do TA real quick. I have no idea what the price of Bitcoin is. I've been preoccupied all day with other things. Still gonna make sure I'm on that flight tomorrow somehow to get down to Atlanta. But let's go and take a look at TA. Speaking of Atlanta, there it is in the workshop section of my website. Nope, not gonna look at monthly. So we dropped a little bit. Wow. So during the show, looks like we dropped almost $100. Wow. Or over the last couple of hours. So the weekly is still the same. Today is Thursday. Let's see how this week ends. Right now, we are borderline whether we're going to get a 9 or not. This is not going to be the kind of 9 I would be screaming for a rebound. it does look like the rebound is already taking place. As you can see on a weekly chart, we went and touched the 7-week moving average and got rejected from that moving average. Now, keep in mind, next week, the 30-week moving average line is going to drop a lot. It'll probably be the biggest drop the 30-week moving average will get. And then the next biggest drop it will get is 3 weeks later, because next, as of Monday, this all-time closing high gets removed from the 30-week moving average. And then 3 weeks later, the second highest close we ever recorded, it gets removed from a 30-week moving average. Now, Ugly Old Goat wrote another article yesterday, and he's already, taking profits from his long position that he entered around 6,000. Then Zen was also talking how exchanges need to defend 6,000. So those guys were looking for a rally a little earlier than I was. I really thought we can make it to 5,000 before a substantial rally. But here's what it means. If this was a decent rally, then when we get to 5,000, we're probably not going to get a very strong rally because we have already backtested some of that rally. Now, ideally, you want to backtest the def cross, but that's kind of high up right now. I think this rally is pretty much over. I'm expecting prices to head back to 5,000 pretty soon. The highest I gave this run up was going to be 7,000, and we did not even make it there. Let's go to the daily chart. The daily chart is turning down. I would keep an eye on this blue line. As long as we stay above this blue line, you can still consider things as bullish. The moment we go below this blue line, and you can somewhat adjust it, the blue line, you can somewhat adjust it. I'm not even sure where to, I guess you put a best fit line. And if we cross this blue line, then things should probably get ugly. This was going to be my ultimate high on this bounce based on daily chart, 7,050. It doesn't feel like we're going to make it there. And it looks like we are already turning back to the downside. The 12-hour chart is flip-flopping. There's absolutely no trade on there. You have a bunch of support here. 50 period, 30 period, and 50 period, 30 period, and this line here. The moment we go below all three of them, it's down she goes. I got a comment with a tip. Let's see what it is. Can Bitcoin break 7,000 with weekly 30 MA and 50 MA crossing? Of course. Because with the weekly, yeah. Because look, they're gonna cross in the $8,500 range. So you got plenty of room to go into the cross. It'll be way above 7K in the cross. And I like it when things pull into the cross. It creates a perfect shorting opportunity. Next. What do we got? 4-hour chart is useless. There's nothing to see there. It's just price flipping now. 30-minute chart is in the cloud. And, it's an hourly chart. Maybe in about 3 hours, you're going to hit a 9. You're going to hit some support, maybe a short-term bounce. I think we're heading back down. I think long positions are very risky right now. I would not be long in this market. I would consider taking a scalp long trade if we get back to 68.50. But right now, it's the short traders definitely have the momentum on their side. All right, guys, gold took a little break from falling. My back is really a mess. I need to figure out whether I need to ice it or heat it. Seems to be a big debate. And I will be on the cruise. It'll definitely be better by then. So please check out the blockchain cruise. This is the latest one, right? What am I missing here? No, I'm on Coinsbank now. Yeah. That's the Thai one. And also, before I forget, BitBlock Boom. BitBlock Boom. Great conference out in Texas. I really wanted to make it there. It doesn't look like I will. Amazing. I wish I was there. Pierre, Seyfedin, Goldstein, Demister, great conference. If you can make it out there, I would strongly recommend it. Wish I was there with you guys, but check that out. And here's the blockchain cruise. It's going to be interesting. Roger Ver got added as a speaker. McAfee, Brock's going to be there. Nice. There I am. And Giacomo should be on here somewhere. There's Giacomo. So, yeah, so that's another cool event I'll be speaking at. All right, guys. I'm going to call it a day, and I need to make sure I'm able to catch my flight tomorrow. And thanks for hanging in there. We're going to do a weekly law show. We're going to go through it. It's not going to be fun, but we got to do it. You got to know what's going on in the space. Talk to you all later.